I'm just going to go with a very safe 12% here. And as far as net income, I'm a little bit more bullish. Let's see here. Analysts have EPS growth of about 16.5% growth over the next couple of years. I am much more bullish. I think that Amazon will be able to just blow that number out of the water. I'm saying Amazon grows 20% bottom line for the next 3 years, and that's on average. Hello, my name is Victor, and in today's video, I want to provide an update on my SOFI put sold, and I want to discuss Amazon because we just got their earnings this week, and I want to provide an update on my prediction that I made for what I think the stock price will be come the end of 2025. A lot to get into in today's video, so let's not waste any time and get right into it. Starting off with SOFI, I just wanted to give you an update that I was absolutely correct with my predictions here. I was able to get out of my put sold on Tuesday because of the time decay. Again, whenever you sell a put, the time decay is on your side. Even if the stock doesn't move throughout the entire month that I sell my put, that works out for me because every single day, the value of that contract is going to lose value over time as expiration approaches. It is the opposite of stocks when it comes to selling puts. You want to sell high. In my case, the contract that I sold originally had a value of $29, and then I bought it back at $1 to close the position. A 1.4% return on my investment. Absolutely worked out according to plan, and just like I mentioned in my previous video providing an update on my SOFI put, I gave a 90% chance that I was going to sell another put, and that's exactly what I did. And just like I had mentioned in my previous video, I sold another put on SOFI. Again, my goal is to keep collecting these premiums through the end of 2025. So let's dive a little bit deeper into the numbers for this new position. I got a higher premium this time around, but I'll explain why here in a minute. So a $39 premium. Again, that is money that I could use for whatever I want to. If I wanted to take it out and buy some clothing, if I wanted to take it out and go eat something nice for a dinner, it's my money the second that I sell that put, but again, I like to leave that money in my portfolio and use it for future investments. My strike price for this position is going to be $25, which is significantly higher than my last put sold, and that's also why I got a much higher premium this time around too. So the higher the stock price goes, naturally, the higher my strike price is going to be over time. As of the time of this recording, I have a 19% cushion drop for the position to be in the money. So a fairly decent size, but we're going to discuss how turbulent SOFI has been here over this past week in just a minute. And I have a 1.6 projected ROI. Again, just as a reminder in case you are new to the channel here, whenever I sell a put, my goal is to have a minimum of a 1.5 return on my investment. Of course, I would be much happier to get something above a 2% return, but so long as I can get at least 1.5, I'm generally happy with that because there are some stocks that I own in my portfolio that will pay me about 1% in a year. So to be able to get a higher return on my money in just about 30 days, I'm telling you, it's like dividends on steroids. And just like I mentioned, SOFI has been incredibly shaky here since I sold that put. I actually had a much higher cushion for this position to be in the money. I think I was like about, I want to say maybe 28% cushion to be in the money. But then over the course of the week, SOFI just completely crashed, down 9% from the all-time 52-week high that it was at just Tuesday, I believe. Because I want to say I closed the previous put sold on Tuesday and then sold another put on Wednesday. And since then, it's just been down and down and down. Now, to be fair, it did kind of recover here towards the end of Friday. So we'll see how everything comes this upcoming week. But again, even if I were to be assigned, if by November the 28th, when the contract expires, I am in the money, I am obligated to buy 100 shares of SOFI at $25, SOFI is a stock that I do not mind owning anyway. I have been looking for a stock in the financial sector to add to my portfolio, and I feel like SOFI, with its growth, is probably the perfect stock for that. But right now, I just want to be able to focus on those premiums to raise up a little bit more cash just in case. So that is the update for SOFI. Now I want to provide an update on Amazon because we actually got their earnings this week as well. And if you have not watched my in-depth analysis video on Amazon, I would recommend you do that because I went into projections, I went into their earnings report back in August, and that would be incredibly helpful to watch that video before you move on this video, but I will leave a link here somewhere on the video for you to watch and also in the description if you would like to view that video. For those of you that just want the cliff notes, back in August, Amazon increased their revenue by 13% and net earnings were increased by 35%. At the time, Amazon was $222, and my prediction was that if Amazon was trading at a 40 PE ratio, come the end of 2025, I predicted that Amazon would be at $265 a share. We just got their earnings on October the 30th, and revenue increased by 13% year over year. Earnings per share staggering, increased by 38% year over year. That is even better than they did in August earlier this year. I mean, that EPS growth is amazing. I wouldn't say that it was a perfect earnings report for Amazon. I did have, some things that looked a little bit concerning, and that I highlighted in red here, and that is that spending can absolutely be improved. I'm going to probably do another video here on Meta sometime in the next week because they actually have a spending problem that is looking more serious than Amazon. So there's a couple other stocks that also need to work on their spending control here through the end of 2025. So Amazon's not alone in that, but their operating expenses were higher than their revenue growth, which personally I don't like to see. Now, what really helped Amazon is that they had $9.5 billion coming in as this little line here as other income. When I did some research, I found that it's Amazon's investment in Anthropic, and that is a AI safety and research company that was founded in 2021. And I am absolutely not going to be upset with a company who is doing a great job investing in other companies. 38% growth in EPS compared to this time last year? Psh, I am not upset with that. As for my Amazon prediction, I still think that I'm going to keep the same numbers that I had in my video that I posted back in August. Revenue growth, I'm still keeping at 12% on average, even though they have been a little bit higher at 13% over these past 2 quarters. EPS, I have at 20% on average. They have been well above 30% over the last 2 quarters, so I might need to revise that come 2026, but for now, I'm just going to keep it where it is. Amazon's current PE ratio is about 34 to 35. And again, just as a reminder, I had said my prediction for the end of the year that Amazon was going to be trading at $265, and that would be at a 40 PE ratio, which is not looking as crazy as it did back in August. If you made it to this point in the video, be sure to give me a like and let me know what your thoughts are on my moves here in the stock market. What do you make of my SOFI puts? Do you think it's a good idea to be able to get some premiums towards the end of the year? Especially with a stock market right now that looks a little bit shaky. Yes, there are a lot of stocks that are going up, but I still think that there are a lot of fears, especially with the overall economy and interest rates dropping. I don't know. I just feel like it's a good idea to be able to collect those premiums through the end of the year, and if I get assigned and get into SOFI, well, I'm not upset with that either. And as for Amazon, everything seems to be according to my predictions. I had ran the numbers back in the summertime of this year, and look, Amazon, even here, is still looking like a buy to me. It's up $22 since I had last spoke about this stock, and I still think that I should be buying more. So let me know what you think in the comments below. If you have not subscribed, I invite you to do so, and as always, I'll catch you in the next one. Peace.